Now, for more on gold prices and what they say about the broader economy, not just the U.S. economy, but the global economy, let's welcome noted newsletter writer Dennis Gartman, as well as economist. He joins us on the phone from Virginia Beach, Virginia. Good morning, Dennis. Thank you for joining us.
Good morning, Scarlet.
As Monica mentioned, we were talking about how the commodities market seems to suggest there is real concern about inflation, but Treasury yields and Wall Street economists might suggest otherwise. What do you make of this split?
Well, I think what we're seeing in the gold market is something other than concern about inflation. I think what you're seeing is concern about, and I hate to say this, but fiat currencies generally. There's a distrust or a distaste or whatever one wishes to say about currencies generally. So you're seeing gold prices rise, not just in terms of dollars, but gold is rising in terms of sterling. It's rising in terms of euro. It's rising in terms of Chinese renminbi. It's rising in terms of Indian rupee. So there's something more than just a dollar-denominated circumstance here. It's a relative disdain for currencies generally. I'm not sure that it's an inflationary concern at all. I think it's rather the former instead of the latter.
Well, how much higher then can gold rally?
Well, you'll like this comment, or you'll find it comical, or you'll disabuse it, but it's going to continue to move higher until it stops. I've been in the business for 35 years, and I know that when you try to make projections as to where a price can go, you usually prove to be rather silly in having done so. The best that one can say is that the trend in gold has been, as I like to euphemistically say, from the lower left to the upper right on the charts. It's likely to continue to be that way for some while longer, and new highs seem to be always in the offing. So we're making new highs relative to U.S. dollars, and we haven't made new highs yet relative to sterling, nor have we made new highs relative to the euro, but we will. And that really is the best that one can say.
Well, what kind of psychological level or technical level are you looking at, or are traders looking at?
Well, obviously 1,000 was reasonably psychologically important, as was 700 versus the euro, but we've gone through those very swiftly and very easily. So at this point, there's really nothing above the market that is of consequence, either psychologically or technically. It will stop one day. We'll get to a point where gold is up very sharply, $30 or $40 or $50 in a day, and then everybody will wake up and say that was enough. The public will be in, and they will be, as they always are, late to the party and rather healthily disturbed.
Okay,
what bothers me is that I'm getting more and more and more and more requests for interviews concerning gold, and characteristically, historically, whenever that happens, that tends to be a short-term interim top.
Okay, thank you so much. Dennis Gartman, editor of the Gartman Letter.